Hello, everyone. Welcome again to another session of financial education. I was reminded of a quote from Warren Buffett where he says that accounting is the language of business. And if you can't speak their language, you can't do business. So we are here to help you learn that language. So today we're looking at a really interesting company, another viewer of ours who have made a recommendation or a request. So today we're looking at Heritage Global Inc. Now, this is a really interesting company. In fact, I think this is the first time, Ted, we've looked at a company of this type, right?
It is indeed, Moeed. How are you? Good to see you.
Yeah, pretty good, pretty good. I'm actually excited to see what we're going to share with our viewers here. So just to give you an idea of this company, and if you look at my screen, we are looking at a business here that essentially helps or deals with companies that are experiencing some form of distress. And they specialize in the industrial manufacturing businesses. So let's give you an idea of what they show here. So if I just share my screen and put the annotation. So on this bit here, you see, how can we be of service, right? And the first thing that you see when you click on that is, well, I'm closing or liquidating a plant. And then you start to look further down and you start to see, requests about selling machinery, even requests for buying machinery. So Ted described this almost as like a pawn shop or a second-hand shop. Obviously, a little bit more high-end than that. And if you have a business where you're shutting down plants or you're selling machinery and you need someone to be able to sell that quickly for you so that you get some money coming in, they would be some of the guys to look at. Alternatively, if you're looking for a bargain and your business is doing very well, you might also approach this company to see, well, do they have any great equipment up for sale that we can get at a cut price? So Ted, really interested to see what we're going to share for our viewers here about this business. Take it away, please.
So thanks a lot, Moeed. So I think it's just worth reiterating that what we're doing here is financial analysis of this company. We don't know the business that well. This isn't an in-depth, this isn't a one-stop shop video where you find out everything you need to know. There may be other stuff going on. There may be deals being signed, acquisitions in the pipeline, things that we don't know about. So what we're really doing here is looking at the finances. So if you know this company well, you've got anything to add, then please do add it in the comments. It's really useful for us to kind of, see how much information and how rich that is. And if you know something and what we're doing is complementing that knowledge, then that's absolutely perfect. So just a reminder that this is, we're looking at Heritage Global as a result of someone called Nully, who says, what do you guys think about HGBL? And I was like, I've never heard of HGBL is what I'm first thinking. So let's go and have a look at them. So here come their accounts. So Heritage Global, the 2020 annual report. And the first thing we need to do is to go and whiz all the way down to their profit and loss account. So here we see their profit and loss account. Now you'll notice that the revenues, Moeed, they've split the revenues into service revenue and then asset sales. So the asset sales here, we need to compare to the cost of those asset sales. And this is effectively the kind of the pawn shop aspect where, they're buying it for about 2.8 million and selling it for 4.4 million. So they're making a nice tidy profit there. But you can see that the real money is in the service that they're providing. So the advisory services, $22 million compared with $6 million actually delivering that. So, really the service revenue I've highlighted in blue is easily the most profitable part of the business. And again, that's borne out by the figures from the previous year as well. And then
is that billion or million? I think they're saying it's in thousands, right?
It's in thousands of US dollars. So this is $21 million.
Right.
Okay, so 21,000 is 21 million. So this is turnover, $26 million turnover. Good point there. Just worth obviously making sure we're working in the right denominations. Then we've got our SG&A, and that's really kind of the core part of the business. Now, couple of other things just to notice while we're here, put it in a different color so we can see it. They've got these equity investments and they're earning from the equity investments. And that's a pretty significant contribution to the overall profitability of the business. Because if we look at the total revenue against the total costs, they're making, what's that, about $3 million dollars in profit, for example. So it's not a huge amount of profit coming in there, but with the equity coming in, then it's boosting them up, and they get this tax rebate. Now, I don't know why they're getting a tax rebate. I'm not a tax accountant, but they had it this year. They had it last year, and that's really been a significant driver on their bottom line. So, yeah, looking, it's looking okay. I mean, even if we look at, the kind of the operating profit, the operating profit is looking, not too bad. Effectively, it was they're operating at about a 9% operating margin, compared with 6% the previous year. So it's increasing, and they're making about a $2.3 million operating profit. But it's a 9.6, nearly a $10 million with all these tax credits and equity investments coming through. Let's jump up and look at the balance sheet. So the balance sheet here is pretty interesting. So the first thing that jumps out at us on the balance sheet is this top line. Look at the amount of cash they've got sitting on the balance sheet. $23 million compared with only $3 million in the previous year. So lots and lots of cash sitting there, and we're probably thinking to ourselves, we've seen enough of this by now. We kind of know where that cash has come from, but we'll confirm that in a minute. So otherwise, total assets are looking pretty healthy. There they are. Total assets have gone up. And if we just scroll our balance sheet down a little bit, we can see the liabilities, the current liabilities, really pretty small. So there's our current liabilities compared with the current assets, absolutely fine here. If we do the same for the previous year, we see our current assets compared with the current liabilities. That's an alarm bell. So that's saying that for every dollar I've got to pay, I just don't have enough cash coming in. So these guys have obviously gone into COVID-19, said, hey, this is our stomping ground. This is a great opportunity. They've gone to the investors. They've raised a lot of cash in order to take advantage of those rich pickings. So let's go and look at the cash flow, because I think that's where all the action is going. And, interestingly enough, the cash flow is often the bit that people don't look at. And really, that's where you're going to find out what's going on. In fact, here's the movement in equity. And we can see very quickly from the movement in equity. So this is where the profit and losses are being actually booked. But over here, we can see this is where they're actually raising additional money. So you can see all of these additional financing being raised by issuing shares and flotations. So here's the cash flow. So we are looking, first of all, we're looking at this number down here. This is the net cash provided by activities. And then what we want to do is just scroll down a little bit further and see the cash. So the cash actually provided by activities. So this is effectively their cash profit, 9 million of cash profit, up from 800,000 the previous year. Big numbers coming in there. Let's just look at some of those big numbers. So we see, and this actually was a bit of an alarm bell to me. There's a lot of depreciation in there. Actually, sorry, that's deferred taxes. They're just stripping that out. That's so fine. So that deferred tax, they're stripping out because they want to try and get it back to an operating equivalent cash rather than net cash flow. This was a little bit nerve-wracking to me. The accounts payable. So if your accounts payable goes up by 5.5 million, it means that you're not paying them. And that was a little bit of an alarm bell to me as to why are they not paying their suppliers? Because if you stop paying your suppliers, they stop supplying you. which can get a little bit messy if you're not careful. Then we got our cash provided by investments. Now, there's a little bit of we're back in these investment notes. So you may remember we come across these before, Moeed, when we looked at people like Apple who've just got too much cash. So this investment in notes, this is basically them parking cash. They've raised lots of money and they're parking it in buying notes receivable, which is basically marketable securities or bonds issued by other companies or countries, governments. So that's not investment, that's just parking money. Okay, so this is the investment. There's a little bit of investment going on here. This is just cash transfer of cash notes receivable to partners. I'm not sure exactly what's going on there. And then we've got the purchase of property and equipment is pretty small. So, really what we're looking at here with the financing, so there's a bit of refinancing going on. That's happening every single year. And then this is the key number here. This is the proceeds from the issue of common stock. So this is where their cash is coming from. In effect, they're not paying their suppliers and they are raising lots of money. And those two really between them are driving this this business, plus some cash received from their partners for loan notes, and that's really where we've seen the increase in cash. So again, sort of quite interesting looking at these numbers, and I have to admit, it's I'm not familiar with the business, so it doesn't all make sort of complete sense to me. But when we look at this, this debt, for example, this debt refinancing, so the repayment of debt and the issuance of debt, I then went back to the balance sheet to see if I could find that debt, and I have to admit I can't. So if I look at the balance sheet, this is where that debt should be sitting. Really, it should be sitting in this non-current portion here, and I can't find it. So, there's something really kind of, it just doesn't sort of seem to make sense. And it may be just the way the business is structured or what it actually does. Down here, this is all the equity down here. There's the equity there, which is what the shareholders have put in and the accumulated deficits, so the loss they've been making in the past. But yeah, that's kind of my my conclusion is I can't find the debt. The debt's gone missing. If we look at the income statement, there's a little bit of interest. So if you're paying a little bit of interest, you'd expect a little bit of debt. And if we look at the balance sheet, we see that there is a little bit of debt, and it's it's actually kind of it's the lease, and then there's this current portion of third-party debt. Maybe that debt is all stuck in here. Maybe it's all tucked away in this accounts payable and accrued liabilities. You'll notice that this has gone up significantly, 5 million. Well, we expect that because that's what we've shown in the cash flow statement. So I don't know. I'm not sure what to make of it. It's kind of, it's an interesting business. Some of the numbers don't quite make sense to me. I'm not 100% convinced by it. Let's go and have a look at the market and see what the market thinks. When I first looked at the market over on the left-hand side, you can see that the market was really unsure about this stock. It was up and down and up and down and bouncing all over the place. And a few people, I mean, that's more volatile than a share in GameStop. And then it finally just crashes down and it just stays down there basically forever. And I thought, well, let's have a look at this area here in a little bit more detail. And so that area I've actually blown up into sort of the 1 year, and we see here's sort of the most recent year. So we can see it's not doing very well. COVID comes in, lots of potential. Then there's a little bit of a crash. It comes back again, and then it's just trending sideways. So, I think it looks to me like the jury is out. It's got a market cap of $112 million. The net asset value is about $30 million. There's 82 million of goodwill, not a huge amount. what I think is really interesting out of all the businesses we've seen so far is this number here, this PE ratio, 11 times earnings. Okay, so they're making a $10 million profit. Okay, now a lot of that profit is tax credits, and that's beyond my pay grade, I'm afraid. So you know, you can see that PE ratio there. It is there. It's a very high P ratio, so it's a very low P ratio, which suggests that this company is potentially cheap. You know, that's a yield of about 10%. You know, 10% yields, you know, don't grow on trees. So, you know, have we uncovered that nugget, that golden nugget, and everybody's been looking over here and we found it, or is the market aware of this and the analysts are just going, we don't like it, there's something a little bit, you know, we don't want to pile into this one. So I think this is an interesting business. It looks cheap, Moeed. The question is it cheap for a reason?
Yeah, that's really interesting. I think there's only been one other company that we have found that looks relatively cheap from a fundamentals perspective, and that was Galliford Try Holdings, right? The construction company.
Absolutely, and construction companies are cheap for a very good reason.
Absolutely, yeah. So I'm really interested to hear if any viewers know about this business model. Maybe you can find where that debt is sitting and how such businesses would classify it. Maybe you have some really strong comments and feelings and analysis about, you know, why this company might seem cheap, and, you know, is it a good buy or is it not? You know, let's share it with the community. So Ted, this was a great video. Again, like we always say, if you have any companies that you would like us to analyze for you, send them over our way. Let us know. Leave a comment in the comment section. And as Ted put it very well, look, we are not looking at all the dimensions that makes a business a great investment, right? We're not here to do all the homework for you. We're here to give you some of the fundamentals that we have seen are some of the biggest gaps when it comes to people's education and knowledge here. And that's around being able to read some of those financial statements, right? So our analysis is based on just the financials without the context of the knowledge of industry knowledge or even looking at some of the offices of the business. So like, share, subscribe, and we're going to see you on the next video for sure. Thank you again, Ted.
Okay, good to see you, Moeed. Thanks a lot.